When you're building or managing a small business, it's easy to get caught up in daily operations and overlook the money side of things. Two areas that matter more than most are accounting and finance. People often mix them up, but they serve different purposes and impact your business in different ways. Understanding how each one works can help you manage your cash better, plan for growth, and avoid costly mistakes. In this post, we'll break down the difference between accounting and finance and help you figure out which one deserves more attention in your business. What is accounting? Accounting is the system that keeps track of your business's financial activity. Every sale, expense, payment, and deposit is recorded, organized, and summarized. Without it, you wouldn't know whether your business is earning, losing, or simply breaking even. Accounting produces financial statements like the balance sheet, income statement, and cash flow statement. These reports show where your money comes from, where it goes, and how much is left. They also help you spot issues early, understand performance, and track growth over time. Good accounting doesn't only record what happened. It also helps you analyze trends and understand the story behind the numbers. When expenses rise or revenue drops, accounting helps you pinpoint the reason. With clear records, you can make decisions with confidence instead of guessing. Why is accounting important? Accounting gives you a clear view of your business. It helps you monitor profit, track spending, manage cash flow, and avoid financial surprises. Accurate records also make tax season easier and protect you from penalties or compliance issues. When you want funding or a loan, lenders look at your financial statements. Good accounting builds trust because it shows that your numbers are accurate and well managed. Investors and banks rely on these records to decide whether your business is stable and worth supporting. What is finance? Finance focuses on planning, strategy, and using your money wisely. It guides decisions such as budgeting, investing, handling risks, and raising funds. Finance asks bigger picture questions like, how should we spend our money? How can we grow? What's the safest and smartest way to invest our profits? Finance helps you make decisions that support long-term goals. It also helps you manage financial challenges, weigh risks, and prepare for unexpected changes. Why is finance important? Finance helps you choose the best way to use your money. It guides decisions like buying equipment, opening a new location, hiring more staff, or launching a marketing campaign. Finance evaluates the cost, the return, and the risks. It also helps when you need outside funding. Strong financial planning improves your chances of getting approved for loans or attracting investors. Finance prepares the projections and plans that show your business is ready for growth. Finance also supports risk management. When sales drop or expenses rise, financial planning helps you adjust quickly and avoid long-term problems. Accounting versus finance examples. Imagine a bakery owner thinking about opening a second shop. Accounting steps in first. It shows her how much profit she's making, her current expenses, and whether she can afford expansion. It gives her the facts. Finance steps in next. It helps her decide how to fund the new location. Should she reinvest her profits? Apply for a loan? Bring in an investor? Finance evaluates each option and guides the decision. If the bakery earns extra money at the end of the year, accounting shows the amount. Finance helps decide what to do with it. Should she save it, invest it, or use it to pay down debt? Accounting tells her where she stands today. Finance helps her decide where to go next. Both are necessary, and both support the long-term success of the business. If this video helped you understand accounting a little better, don't forget to like, share, subscribe, and turn on notifications for more accounting tips and guides. See you in the next video.